Silver prices have surged by 34% in 2024 alone, nearing $35 per ounce for the first time in over a decade. And at the same time, artificial intelligence is projected to add a staggering $15.7 trillion to the global economy by 2030. But here is the big question. Could the collision of AI-driven demand and silver's critical industrial role send its value skyrocketing in the years to come? Let's find out. Will silver prices soar in 2025 because of AI? That's the big question we're tackling today. So silver, a metal often overshadowed by gold, is quietly becoming one of the most exciting investment opportunities of our time. And AI, it's revolutionizing industries, financial markets, and the global economy. But how are these two forces intertwined? Let's dive in. The global silver market this year is experiencing a seismic shift. For the fourth consecutive year, we're seeing a physical supply deficit, and this year's shortfall is estimated at 182 million ounces, with global demand projected to hit 1.21 billion ounces. This is the second highest on record since 2010. And what's driving this demand? Industrial applications, which were expected to have grown by around 7% this year. And this is surpassing the 700 million ounce mark for the first time. Sectors like photovoltaics, which power solar panels, and the electric vehicle market are leading the charge when it comes to demand. For each electric vehicle, for example, this requires up to 50 grams of silver. Now, with governments like the US investing $174 billion in EV infrastructure, silver's industrial demand is only set to grow. But for demand, you need supply, and it isn't keeping up. Mine output has barely increased, rising by just 1% this year. Recycling has grown by 5%, which is a 12-year high, but it's not enough to close that gap. These supply constraints are a major reason why silver prices have surged by 34% this year, nearing this $35 per ounce mark. This is the highest level since 2012. Now, this record-breaking demand for silver in 2024 isn't happening in isolation. It is deeply connected to the technological advancements shaping our world. While traditional drivers like photovoltaics and electric vehicles are significant, the rapid rise of artificial intelligence is introducing new layers of demand. AI technologies are pushing those boundaries of what's possible in industries reliant on silver, not only fueling today's growth, but also setting the stage for unprecedented opportunities in the years to come. AI isn't just reshaping our lives, it's fueling demand for silver. Advanced technologies like AI-powered data centers, robotics, and semiconductors rely on silver for its unparalleled conductivity and durability. Now, take the renewable energy sector, for instance. AI systems are optimizing energy grids and driving advancements in both solar and wind technologies, and both of these require significant amounts of silver. And the same is true for the automotive industry, where AI-powered systems are enhancing electric vehicle designs and their infrastructure. The rapid adoption of AI is creating ripple effects across industries, and silver is the heart of this transformation. This dual role, being both a vital industrial component and a safe haven asset, makes silver uniquely positioned to thrive in an AI-driven future. But silver isn't just benefiting from AI, it's also protecting against the risks that AI may well pose to financial markets. In our recent interview with Jim Rickards emphasized how AI-powered trading could lead to systemic risks. Algorithm-driven markets may be efficient, but they're also fragile, and a rogue AI algorithm or a technological failure could trigger widespread disruption across markets. This was seen in the 2010 flash crash. Now, as AI dominance grows, so does the potential for these black swan events. And this is where silver's value as a hedge shines. Unlike digital assets or fiat currencies, silver is tangible and physical. It operates outside the vulnerabilities of AI-dependent systems. Its historical role as a store of value and its ability to hedge against both inflation and geopolitical risks, it makes it an essential component of a well-diversified portfolio. Silver's appeal lies in its unique duality. It's a double-edged sword to protect your portfolio. On the one hand, it's a critical industrial metal that's driving the technologies of tomorrow. And on the other, it's a safe haven asset, protecting against systemic risks and economic crises, all of which are only set to grow in the years to come. Let's not forget the gold to silver ratio, which is hovering around 90. Now, historically, levels have indicated that silver is undervalued relative to gold. With gold priced at over $2,700 per ounce and silver over $30, analysts believe silver has greater percentage growth potential in the long run. The future looks really bright for silver investors. The World Bank predicts a 7% rise in silver prices next year, followed by another 3% rise in 2026, and that's just the World Bank. These forecasts come on the back of strong industrial demand and ongoing supply constraints. Meanwhile, other analysts believe that the physical supply deficit will persist for years, ensuring tight market conditions and support these higher prices we're looking for. And meanwhile, as AI and green technologies expand, silver's importance and value and price will only grow. So can we expect to see silver prices soar in 2025 because of AI? All signs point to yes, from record industrial demand and AI-driven innovations to its role as a hedge against financial risks. Silver is poised to shine even brighter than ever. The question isn't just about timing the market, it's about understanding silver's long-term value. With systemic risks mounting and technological transformations accelerating, silver offers both growth and security. And these are two qualities that are invaluable in today's world. So what are your price predictions for silver prices in 2025? Let us know in the comments below. And if you're interested in more insights on precious metals as well as market trends, then check out these videos now.